Let's break down the crypto market and demystify what it's all about. It can seem complex at first glance, but the core concepts are surprisingly straightforward. Imagine a digital piggy bank, a place to store your wealth, but instead of dollars, euros, or yen, you're using digital money, cryptocurrency. Think of it as a new form of currency for the internet age. This money isn't controlled by any bank, financial institution, or government. That's a key difference from traditional currencies. It's secured by cryptography, a complex form of encryption, making it incredibly tough to counterfeit or steal, providing a secure way to transact. The crypto market is where people from all over the world buy, sell, and trade these digital coins like Bitcoin and Ethereum, the two biggest names in the crypto space, operating 24/7 worldwide, never sleeping. It all runs on blockchain technology, the backbone of most cryptocurrencies. A public, unchangeable ledger, meaning every transaction is recorded and verifiable. That meticulously records every transaction, ensuring transparency and security. No single entity controls it. It's not like a company or a bank. Power is spread across a global network of computers, all working together to maintain the network, making it incredibly resilient and transparent. Why use crypto in the first place? Some see it as the future of finance, a revolutionary shift in how we handle money. Others see it as a new investment opportunity, a chance to grow their wealth, and some use it for things like NFTs or blockchain games, exploring new digital frontiers. The market's value is shaped by all these uses and beliefs, driven by supply, demand, and future potential. Bitcoin, the first cryptocurrency ever created, is often called digital gold, a store of value in the digital age. It's the oldest and most recognized cryptocurrency, paving the way for everything that followed. Ethereum added a twist, a whole new layer of functionality. It lets developers build apps directly on its blockchain using smart contracts, opening doors to DeFi and NFTs, revolutionizing finance and digital ownership. These two giants lead the market, setting the tone for the entire industry, and their price moves often influence all the smaller coins, altcoins, creating a ripple effect. Understanding Bitcoin and Ethereum, their history and their technology, is the best starting point for anyone new to the world of cryptocurrencies. The crypto market is fast, global, and always evolving, constantly changing and innovating. It's a new kind of financial ecosystem, a digital landscape with endless possibilities, open to anyone with an internet connection, breaking down traditional barriers to entry. Whether you're here to invest, build innovative projects, or just learn and explore, it all starts with understanding the basics, the fundamental principles that underpin this exciting new world. Welcome to the world of crypto. Let's recap the whirlwind that was the first half of 2025 in crypto. A period defined by significant milestones, unexpected turns, and a whole lot of volatility. We're going to break down the key events and trends that shaped the crypto landscape during those crucial 6 months. The year began with Bitcoin riding high at $85,000. This followed a strong rally fueled by increased institutional adoption, as major players entered the space, and the emergence of clearer, more defined regulations that provided a sense of stability. January and February offered a period of relative calm. Prices largely moved sideways as the market took a breather, consolidating its gains after the previous surge. It was a period of digestion, where investors assessed the landscape. In March, however, things took a dip. Bitcoin experienced a notable correction, falling to $72,000. This downturn was largely attributed to rumors circulating about potentially stricter regulations in key Asian markets. Adding to the pressure was the concern surrounding rising U.S. inflation figures. This combination of factors certainly tested investors' nerves and resolve. As is often the case in crypto, this dip presented a fork in the road. Some saw it as a prime buying opportunity, while others succumbed to panic selling. But by late April, the market demonstrated its inherent resilience and began to rebound. The earlier regulatory fears started to ease. Furthermore, the announcement of new and innovative blockchain projects from major tech companies injected a fresh wave of confidence into the market. By the end of May, Bitcoin had not only recovered but surged to a new high, breaking above the $90,000 mark. Ethereum also experienced a significant surge, largely driven by the successful implementation of a major upgrade to its network. The overall market demonstrated remarkable resilience throughout this period. As June came to a close, Bitcoin was trading around $95,000, and the total cryptocurrency market capitalization had climbed above the impressive $4 trillion mark. Market sentiment was undeniably strong, with a palpable sense of greed dominating the overall mood. In summary, the first half of 2025 played out as a classic crypto roller coaster ride. Calm, dip, recovery, and new highs. This sets the stage for what promises to be an exciting July in the crypto markets. While volatility is expected to remain a constant, overall optimism is running high among investors and analysts alike. The market's demonstrated ability to bounce back from adversity has impressed even the most hardened skeptics. All eyes are now firmly fixed on what the second half of the year will bring. The story of 2025 in the crypto world is far from over. In many ways it feels like it's just getting started. Some coins truly shined in early 2025. Solana SOL tripled in value thanks to its speed and low fees. Developers flocked to it for DeFi and NFTs. Avalanche AVAX soared as big companies used its subnets to build custom blockchains, driving corporate adoption. The hottest trend? AI and crypto. Tokens like Fetch.ai (FET) exploded as investors bet on decentralized AI marketplaces. These AI coins saw gains of over 500% in some cases. Meme coins made waves too. Galaxy Cat, for example, went viral fueled by online hype and celebrity mentions. Some made fortunes, others lost big. Meme coins are risky and volatile. The lesson in crypto: both technology and community can drive prices. But hype fades fast. Know the risks. The top performers combined real innovation with strong narratives. The market rewards both utility and excitement. But always remember, what goes up fast can come down just as quickly. Stay sharp and do your research. Ever wondered what makes the price of your favorite cryptocurrency tick? What forces cause those exciting surges and sometimes those nerve-wracking dips? It's not magic or some hidden algorithm. It's a fascinating interplay of several key factors, starting with the fundamental principles of supply-demand, which reflects the overall interest and adoption of the crypto, and of course the ever-present element of human emotion. Limited supply, a key feature of many cryptocurrencies like Bitcoin with its hard cap of 21 million coins, means that rising demand, even a moderate increase, can significantly push prices up due to scarcity. News headlines and overall market sentiment are huge drivers in the short term. Positive news, like a major company announcing they're accepting crypto as payment, or a groundbreaking technological advancement, can send prices soaring in a matter of hours, fueled by excitement and increased buying pressure. Conversely, bad news, like a major security hack exposing vulnerabilities or a government regulatory ban announcement, can quickly crash the market as investors panic and rush to sell off their holdings. The Crypto Fear and Greed Index is a useful tool that tracks the overall market mood and investor sentiment. Extreme fear in the market can often signal a potential buying opportunity for savvy investors, while extreme greed might indicate an overheated market and a time for caution. Macroeconomic factors play a significant role too. High interest rates or rising inflation can push investors either in or out of crypto, depending on their risk tolerance and investment strategies. When traditional markets like stocks experience volatility or a significant decline, the crypto market often feels the impact, sometimes acting as a risk-on or risk-off asset. However, long-term value is primarily driven by technology upgrades and increasing real-world adoption. These factors contribute to the sustained growth and long-term value appreciation of cryptocurrencies. If a coin gets faster transaction speeds, cheaper fees, or offers more practical utility features, it naturally attracts more users, developers, and businesses to its ecosystem. Ethereum's ongoing upgrades and improvements are a perfect example of this dynamic. Better technology generally translates to a higher price and increased market confidence. Ultimately, real-world utility is what separates the long-term winners from short-lived hype. The more people who are actively using a coin for real-world transactions and applications, the stronger and more resilient its foundation becomes against market fluctuations. In the end, cryptocurrency prices reflect a constant tug-of-war between hope for the future, fear of the unknown, and the relentless march of technological innovation. To navigate this complex landscape, stay informed, closely watch the news, and strive to understand the underlying technology. The crypto market is inherently volatile, but there's almost always a logical reason behind the dramatic moves. Don't just blindly follow the crowd or rely on hype. Take the time to understand what's truly driving the market. That's the key to not just surviving the inevitable market swings, but thriving in the long run. What do the experts expect for July 2025? Many analysts predict continued bullish momentum, driven by strong institutional inflows, especially into Bitcoin ETFs. If demand stays high and supply remains tight, Bitcoin could push toward the $100,000, $110,000 range. But some warn of risks. High leverage in the system could trigger sharp corrections if prices dip. A sudden drop could cause a cascade of forced sales, amplifying losses. The consensus? July will be volatile. We might see a push to $100,000, followed by a pullback as investors take profits. Most expect Bitcoin to settle in a new range, maybe $88,000 to $98,000, as the market digests gains. The only certainty is uncertainty. Expect swings, not smooth sailing. Stay alert and don't chase the hype. Thinking of buying your first crypto? Start smart. Only invest what you can afford to lose. Crypto is volatile. Begin with small amounts. Never use your emergency fund. Stick to the big names at first. Bitcoin and Ethereum are the safest bets for beginners. Avoid chasing unknown coins promising huge returns. Always do your own research. Don't buy just because someone online says so. Understand what a project does, who's behind it, and if it has real users. Use reputable exchanges like Coinbase or Kraken to buy your first coins. For larger amounts, learn about self-custody and hardware wallets for security. Protect your passwords and enable two-factor authentication. Crypto is about personal responsibility. Be your own bank. Take your time, learn the basics, and don't rush. The best investors are patient and informed. Should you invest in crypto right now? It depends on your goals and risk tolerance. If you're looking for a quick win, think twice. Crypto is a long-term game. The market has momentum, with growing institutional adoption and better regulations. But prices are high and the fear and greed index signals caution. Buying at all-time highs is risky. Corrections can happen fast. If you're nervous about big drops, consider waiting for a pullback. A smart approach is dollar-cost averaging. Invest a fixed amount regularly, regardless of price. This smooths out your entry and reduces risk. Don't try to time the market. Focus on consistency. Only invest what you can afford to lose. Crypto rewards patience and discipline. Make a plan and stick to it. That's how you survive the ups and downs. Let's talk risks, because crypto isn't all upside. Volatility is the biggest. Prices can swing 20% or more in a day. If you can't stomach big drops, crypto may not be for you. Regulation is another risk. Governments can change the rules overnight, impacting prices. Security matters. Exchanges get hacked and scams are everywhere. If you lose your private keys, your crypto is gone. No do-overs. Learn about security, use strong passwords, and consider a hardware wallet. Not every project will succeed, many coins will fail. Diversify and research before investing in smaller coins. Crypto is like investing in startups. Most fail, a few win big. Manage your risk and never bet more than you can lose. Stay cautious, stay informed. So why bother with crypto? The potential rewards are huge. Early investors in Bitcoin and Ethereum saw life-changing gains. Crypto can outperform traditional assets, but it's risky. It's also about being part of a tech revolution. Blockchain could reshape industries. Owning crypto means owning a piece of the future internet. For many, it's about financial freedom, controlling your own money, beyond banks and governments. In unstable economies, crypto can be a lifeline. July 2025 is a crossroads. Strong momentum but real risks. Start small, stick with leaders, do your research, and consider dollar-cost averaging. The journey is risky, but the potential rewards make it one of the most exciting markets today.